Housing bubbles and housing crashes. I'm still seeing many clickbait, fear-mongering titles among even reputable news sources. So what's up? What's the reality? Will the housing market crash in 2022? Are we in a housing bubble? What is the housing market in 2023 going to be like? Let's dive into October numbers and then stay tuned to the end for some forecasts about the 2023 housing market. Hi, I'm Charlotte, a local real estate broker here in Thurston County. First, let's take a look at the median home sales price. I want to preface this by saying that normal yearly appreciation is between 3 and 6%. That is what a healthy market appreciation looks like. These last few years, we've had these crazy double-digit month-over-month appreciation levels, and that's not sustainable on any level. It ends up keeping first-time buyers from entering the market because entry-level prices keep going up and up and up. So we really do want to get back to a more normal, healthy appreciation level for a lot of reasons. So back to the median home sales price. Now the median is where half of the homes were sold for higher and half of the homes were sold for lower. We're looking at $499,990. This is a 5.3% increase over last year, and this is awesome. This is in a much more normal range for appreciation. So taking a look 1 month further back into September, it was 2.7% of an increase in appreciation over the previous September of the prior year. August was also a smaller increase in appreciation than we've seen over the last couple of years with those, crazy double digits. August was an increase of 5.6% in the median home sales price over the previous year's August. So we'll have to see if this appreciation keeps trending in these more normal appreciation levels. But in the meantime, it should also reassure you that we're not seeing depreciations, just decelerations, and that's a big difference. New listings went from 535 to 352, and that's a 34.2% decrease from October of 2021. So while we're seeing inventory come on, it's at a much slower pace. And part of that has to do with the seasonality of real estate. We typically see it a bit slower in the colder months. But another part has to do with us sort of getting back to a more normalized market. And I want to show you what I mean, so stay tuned to the very end. Pending sales are down 45.8% from October 2021, at 581 down to 292. Now this goes along with what I was saying about new listings. Next up, homes closed. There were 335 homes closed in October of 2022. That is a decrease of 42.3%, meaning that's a decrease from 581 closed to 335. And that decrease is a big drop. But you'll see with the rest of the numbers, it's not necessarily something scary, it's just going to a more normal market. When we quote the inventory number, it's a snapshot of 1 day. The rest of the numbers take the full month into account. But the inventory is a snapshot that's usually taken on the last day of the month. So inventory was 608 homes when they took the snapshot. This is an increase of 79.4% from October of last year. This is obviously significant, but when we look at the days on market or the number of days a property is on the market before it goes under contract, we can see why inventory is up. So days on market for October were 31 days. This is up 138.5% from October of last year. That percentage is a huge jump. It went from 13 days to 31 days. Properties are staying on the market a bit longer and getting closer to a number that's more typical for a balanced normal seller's market. And guess what? This is great for buyers because they have a little bit more time to view properties before things are going under contract. And sellers, you just need to make sure that you reset your expectations when you're going to sell your home. It's likely that your home is going to be on the market potentially for several weeks before it goes under contract. So just remember, just because it doesn't go under contract in 2 days, doesn't mean there's a catastrophe and no one wants to buy your house. It'll be okay. Just make sure it's priced correctly. Percent of list price received is always a fun number to look at too, because it shows what homes are actually going under contract for. So you can see whether they're going above or below listed price. And the average for October was 99.2%. So we're definitely still seeing some that are going above, but many are at or below list price. And if you compare that to 102.2% from last year, this is a much better number for buyers. This also means we're looking at a lot less bidding wars that are bidding up those properties by thousands and thousands of dollars. The last metric to take into consideration is the month supply of inventory. This number shows how many months of inventory we would have if nothing else came on the market. So October measured 1.5 months of inventory. So if nothing else came on the market, nothing new, we would run out of homes to sell in about 1.5 months. Now, a balanced market is 4 to 6 months. So while we are seeing the market changing a bit, we can still see that we are firmly firmly planted in a seller's market. Okay, so I mentioned in the beginning of the video that I wanted to show you how I think we are getting back to a more normal market. So I compared October 2022 to pre-pandemic October of 2019. The days on market was 26 compared to this year's 31, so pretty close. Also note that October 2018 was also 31 days. So these days on market are not new, it is not a new thing, and it also does not mean that the market is crashing. Okay, let's also talk about percent of list price. The percent of list price received this month was 99.2%. That was for this October. Now, in October 2019, it was 99.7, and in October of 2018, it was 99.8. Again, these all align pretty well. Okay, months supply of inventory are also very close to each other. This October's 1.5, October of 2019 was 1.1, and October of 2018 was 1.8. This means the data that we're seeing, it's not new, and it's now closer to pre-pandemic levels. It wasn't crashing then, and it's not crashing now. This is not a crash. This is really important to note. We are seeing things stabilize and normalize. Please don't believe all the clickbait news articles. They're designed to scare you. It's important to look at the historical data and understand context.
Experts are more divided on their latest national forecasts. You can see here that there are a couple that are predicting depreciation, and some experts are still showing appreciation. Experts believe it all depends on factors at play in the local markets, like balance between supply and demand. Based on our local data and our current supply and demand, it's likely that locally we should continue to see appreciation, but at a more normal appreciation level.
We will still have an undersupply of homes on the market, and we're going to continue to face this for a while as millennials are moving through their peak home buying years. Since they're the largest demographic behind the baby boomers, demand isn't going away anytime soon. This is welcome news for homeowners who may have been led by the media to believe that their home would lose value or that the market is crashing. And it is not crashing. I repeat, it is not crashing. Decelerating, yes, but not depreciating and not crashing. Those are very distinctly different. This is also great news for buyers because while it's still a seller's market, it's evened out a bit and things like inspections and other negotiation factors are back on the table. So what bucket are you in? Sellers relieved you aren't losing your home values, or buyers ready to get back in the market because things have slowed down a bit? Let me know in the comments below. Thanks so much for watching. I hope this was helpful. See you next time.